Assalamualaikum, my name is Mohammed Shamizan bin Mohammed. My monthly number is 01DKB18F1012. So today I will be explaining about recovery loan. So there are two types of recovery loan, which is the first one is secure loan and the second one is unsecured loan. So for the secure loan are loans that are backed by an asset, like a house in the case of a mortgage loan or a car with an auto loan. This asset is a collateral for the loan. So basically, this asset is a guarantee for bank safety and secure. For example, when you agree to the loan, you agree that the lender can repose the collateral if you don't repay the loan as agreed, or if you default payment and do not make payment at the right time. Okay, so next, there are several types of secure loan. The first one is mortgage loan. Mortgage loan is a secure loan where the asset under pledge is a property. So basically, your house, your farm, your building is a asset that can be a collateral and can be a collateral to a banker. If so So when you make the loan and you pledge your building as a collateral, and when you default payment, so bankers will sell your building to get the money that they give to you. So the next one is car loan. Car loan is basically the loan that we apply if you want to buy a car. The collateral for car loan is the car itself. So basically, when you default a payment, so the banker will pull up or take back the car that you buy using their loan money.
Assalamualaikum, my name is Aina Walkis binti Rizwan. My metric number is 01DKB18F1031. So I'm gonna continue with the next slide, which is the advantages of secured loan. Firstly, secured loan can be borrowed in larger amount. As we know, secured loan is focusing on specific assets such as a house and vehicle. The borrower can borrow large amount of money to purchase the asset, because at the end it will benefit the bank, because the bank will receive the loan repayment plus interest. And let's say if the borrower did not pay the monthly payment to the bank or default payment, the bank can sell the properties. Next is lower interest rate. For this point, secured loan usually have a lower interest rate compared to unsecured loan, because from the bank perspective it is less risky. Why? It is because of, if the borrower is unable to repay the loan, the bank has the right to foreclosure and auction the secured loan to recover the amount owed. Then we move to the next point, which is the disadvantages of secured loan. First, if the borrower encounter financial difficulties, the bank could seize the properties. This means that if the borrower is unable to pay the installment or default payment, the asset will be auctioned off by the bank. Therefore, be careful before borrowing a secured loan. Last but not least, the disadvantages of secured loan is the amount borrowed can only be used to purchase specific assets. You cannot apply secured loan to purchase other than the specific asset. That's all from me. Thank you. I pass to the next presenter.
Assalamualaikum puan. So today I'm going to present about the unsecured loan. For first, the definition of unsecured loan. Unsecured loan is a loan that you can obtain without use the collateral to obtain to get a proof of the loan. Next, the loan itself can be approved if the borrower have high credit rating. For example, the borrower need to have established financial status so he can pay the loan without the lender have risk to not getting the loan back. Okay. Next, for the difference on the interest rate. Interest rates of the unsecured loan have higher than the secured loan. It is because the unsecured loan don't have any collateral to be put if they don't pay the loan. Next. So next, for the borrowing limits, usually the unsecured loan have lower borrowing limit than the secured loan. It is because the borrowing limit for unsecured loan, they give loan depend on the financial need of the borrower. Next. So next, I will talk about the difference between unsecured loan and the secured loan. For the unsecured loan, for the speed of the approval, usually the unsecured loan will be approved immediately for about hours later after the apply. And then for the secured loan will be approved about a month or maybe later. So next, I will talk about the collateral. Usually the difference between unsecured loan and the secured loan, it is because the unsecured loan don't have any collateral to put, and for the secured loan they have loan, so the lender don't need to risk if the secured loan borrower don't pay back. Next. Lastly, for the terms or payback period, for the term of unsecured loan, the term is shorter than the secured loan payback period. So that's all for me. Thank you.
Assalamualaikum. My name is Ahmad Afifi Biramlan. My number matric is 01 DKB 18 F1022. Today I want to talk about my point is the benefit of secure and unsecured loan, and the second one is the type of unsecured loan. The first one, the benefit of the secure loan is the bank offer the reasonable rate to the borrower, and the second one is they have the larger and flexible term of tenure, and the last one for the benefit of the secure loan is they provide the good quality loans, mean the borrower must be from the 21 above and must have stable income and permanent work. Move on to my second part is the benefit of the unsecured loan. The benefit of the unsecured loan is they offer the lowest rate to the borrower, means that if you want to apply, they will process it in a short period of time. And the second one of the benefit of the unsecured loan is you don't need to keep any asset or any collateral to apply this loan. And move on to my second point is the type of unsecured loan. the type of unsecured loan, the first one is the student loan. The student loan is to help the student to finance their tuition, their living expense for their university expenses. Mostly the example of the student loan is the MARA and PTPTN. The second one of the type of unsecured loan is the business loan, and this loan mostly to the corporate company to help to fund their business project and to add more capital to their project. And the last one of the type of unsecured loan is the business loan. Oh, I'm sorry, the personal loan. The personal loan is for the people who want to get the money for their wedding day, and also they also apply the personal loan to renovate their house and to go vacation sometimes. And that's all from me, my presentation. Thank you.